Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel, as always, joined by Joel Elconin and Dennis Dick. On today's show, we're going to digest yesterday's session and what a session it was. Every sector is on the table. If you want to discuss it, we will. Facebook, China, the world's coming to an end. I don't know. So we'll talk about that. We'll talk about the earnings that we had after the bell. We have the Dropbox IPO today. Maybe we'll get to that. And we'll do, again, from 9 to 9:15, do ticker time. We'll answer your questions on anything you have in that window. And then our guest today is a new guest who's joining us at 8:35. His name is Greg Firman. He is with E-Trade FX, a Canadian shop. He's going to talk to us about his market philosophy and his trading style. But Joel, how are we doing this morning in the S&Ps?
30-point range here. They continued to slaughter the market off that weak close. Took it down to 26.17, folks. No number down there because that was really a vacuum area. So it's going to be a number, though, because we're 30 points above that. We are now green on the session by 2 3/4 points, 46 even. Destined to take out that pre-market high of 47 even, probably in about the next 30 seconds. Above that, there's just no resistance, folks. Upside target on the day based on a 9-day average trading range is 58, but that's only 12 points away. And number I like if we really get going into gear here, 26.70 is a swing number from yesterday. Looking at the crude market here, trading up 24 cents at 65.24. Also, crude is in the green too. Crude is in the green. Gold's in the green by 14.20. Taking out that critical 13.40 resistance level. See if that could hold. Silver in the green as well by only 14 cents at 16.53. And Bitcoin, just no one talks about Bitcoin anymore except us. Bitcoin is trading down 2.87% at 8,500. Just can't seem to really catch a bid and stay above 9,000. So, Dennis, I could see that you are just focused in there.
It's a fast market, Joel.
Yeah.
I'm going to try to help you guys on the radio show here today. And I'm speaking to everybody live here right now, but I have so many positions on. I've got 55 positions on here, overnight day trades, trying to work out of them. I was short a lot of stocks, obviously. I'm hedged, so now I'm trying to get out of the hedges because my hedges come all the way back. So now it's just a matter of trying to work out of the other side of these trades. This is the most volatile market that you're going to see here right now. Obviously, we're down. How far are we down last night, Joel? Tell us about it.
31 handles from where we're at now. We were down 31 handles. We just got in a vacuum area, folks, because, going back a couple weeks in February, the volatility, we had those crazy lows at basis the June contract, 25.32.5 and 25.33. But that's over 100 handles away. So trying to find some levels in here, and there's really nothing. We've blown through this area. Now, 26.17 is looking like a good number, and we'll be looking retracements off that. So 55 positions, Dennis. J. is saying you must be an octopus, but
when you're doing it manually, it's one thing when I used to run all this automated, but when you're doing most of your trading manually now, it's you got your head on a swivel here. That's what it really is. You got your head on a swivel. And I mean, we are just, I'm just trying to focus on, whatever I can here right now to work out of a million positions here. So anyways, like I said, I'm going to try to do my best here to stick with you guys here. So, but you guys running, I'll try to give you analysis as I'm trading. There's going to be, we're going to break the rule today, man. I always say don't trade and do a radio show. We are breaking that rule here today because I have way too many positions to just sit here.
Okay, let's do it a little bit different. Spencer,
you're running it. I'll give you analysis on the fly out of my head. I won't even probably be looking at charts here. It's all going to be out of my head because I can't take my eyes off of my positions.
Okay. All right. So let's, Spencer, why don't you, I'll lead the way and you can supplement me after that. We did have some significant earnings after the close. So let's go to the earnings stocks and Micron Technology, much talked about stock, big run ahead of it. Spencer, give us the report and your analysis.
Yep, I got a question to bring this up on Twitter last night, so that is why it's first on the list. Micron Q2 adjusted EPS $2.82. That beat the estimate by 8 cents. Sales $7.35 or $7.28 billion. So a beat on the top and a beat on the bottom for Micron. They did also give some upbeat Q3 guidance. That beat $2.76 to $2.90 is what they said. $2.63 was the estimate. Sales $7.2 to $7.6 billion versus $7.27 billion estimate. So very strong Q3 guidance and good earnings for MU.
Okay, here's stock. It had just a major run into the report. So I think you might have had some nervous Nellies on that number. Also, I don't know what time that came out, but just spoos were probably getting crushed at the time. You had one big bar right on the initial report, and they kind of got overdone on that when they took it down to 53.85. Tried to bring it down in the 54 handle once again and made a pre-market low of 54.18. So super extra major support if we get to 54. The way this 15-minute chart looks to me right now, I don't think we're going back down to 54. We are well $3 over that. The high of the rebound as we speak is 57.60. So there's a minor number for you. And then we'll go to let's go to the daily chart here. It's always good to look at a daily because I bet you we're trading within yesterday's range and see if I'm correct. Let's look at yesterday's range. Yesterday's range, you had a low at 58.11. So there you go. You fill the gap at 58.11. That's one level. 58.92 was a close. I'll use that as a level of control. And then 60.30 was your high from yesterday. So it could, especially where the spoos are rallying here, now up 7 points. We're over 25.50. We may hit my target here by the end of the show. But those are the levels. I mean, the stock had a great run, good report. They knocked it down, but people want to own this stock. And Dennis is one of them wanting to buy on a pullback. A little rich for my taste based on the price action, but still a low PE. Price targets of 100. They're kicking out the chips. That's my take on Micron.
I'll just say Micron, that was a good report, a very good report. They hit the stock hard. Again, you can see it getting hit here this morning. And I'm going to say it is, a victim of the markets that we're in to a certain extent. You'll say, what the hell are you talking about? We're trading up today. But we were down significantly yesterday, obviously, losing 700 Dow points. We were down last night again. And it's a little bit of a victim, if with reports in not so volatile markets and not so nervous markets, I think the stock probably is higher. But that being said, I had a big run into the report. Full disclosure, I do have my 1/3 position in Micron. Wish I would have been buying on that dip when it went all the way down to 53.65 last night. But, there's lots of things going on. And I try to, with the investment portfolio, try to take a longer term look at it and not trade my investment portfolio after hours. So that being said, it's popped back, got a lot of those losses back. It was a good report, though.
That pre-market low area when you got down to 54, that was your March 8th low of 54.30. So
let's go to Nike.
Nike, all right, and
just do it.
Let's do it. Q3 adjusted EPS 68 cents. Estimate was 53 cents, so a nice 15-cent beat for Nike on that number. Sales $9 billion versus $8.85 billion, so a beat there as well. Q3 inventories were up 9% year over year.
All right,
this is a big pop.
Yeah, it is. It's a nice move. And Dennis, you want to throw some comments in first on this?
I was just gonna say, and I had thought this last time. I mean, the big psychological $70 level you got to think about there. And we didn't quite get there last night, but if I look at it, that's where we topped out, obviously, and reversed back on February 27th. We're a couple points away from there. See what the market does overall. If it can continue to drag it higher, I think you have major resistance up there at 70. I'm not fading this move, though. This is one that's held on fairly well. It was at major support at 64. It's at 67.85 now. I may be fading up at 70, but I'm just too nervous to fade here at 67.85.
Okay, let's take a look at the pre-market high. Big old range on that, man. People are just throwing that stock around. 63.06, you went down, and then you skyrocketed into the 69 handle at 69.30. Settling in up $3.48 at 67.90, just kind of creeping its way back up here. Let's take a look at the daily charts because I bet you we're within daily range here. Nope, we're breaking out. We are breaking out of yesterday's range. 68, we're above the 68.30 high. No, we're not. So 68.30 is going to be a level to keep an eye on. That was your high on Feb 28th. Now, if in fact you can clear that level with strength, 70.25 was the high of the move, and that was made on the previous day. So 68.30, 70.25, and in order for Nike to make a new all-time closing high, it will need to end the session above 69.65. So if you're looking to sell this at the all-time closing high as of today, keep an eye on 69.65.
Under Armour getting the beats today from that?
Oh, let's see here. No, it's trading up 20 cents.
Why would you think Under Armour get the beats from that, Spencer? Just curious.
Because they get
train of thought.
Because they get the beats on everything lately. So
because it's Friday and Nike, we'll give them the beats just for fun.
Or it could be good. It could be good.
I don't think, and some people do say there's an inverse correlation between Under Armour and Nike. I don't think that. And I've traded these two together before. Obviously, they're a little bit their own animal, but if you put those charts on top of each other, they still kind of look the same to a certain extent.
All right, moving on. Yep. Okay, fine. Fair enough. Moving on to
putting a hole in your thesis there, Mr. Spencer Israel.
Spencer, do you have, for full disclosure, do you have Under Armour in your portfolio?
No, I do not.
Okay.
Under Armour wearing right now?
Because Spencer went to.
Do you have Under Armour in your wardrobe?
Of course.
I got one pair of Under Armour shorts.
I
don't like them very much. Spencer went to University of Maryland, Baltimore County.
No, I didn't. Not Baltimore County. I went to the real one. All right, moving on to Cintas.
Moving on.
CTAS. Let's do that number. The Q3 adjusted EPS is $1.37. That beat by 10 cents. Sales $1.59 billion versus $1.57 billion. So beats on the top and the bottom. For Cintas' Q3 numbers, the Q4 earnings coming in way higher. EPS beat by 20 cents. Sales was in line, but the EPS number was a huge beat for Cintas.
Floor mat company. Remember last report? You said they didn't make floor mats, and I told you my Quiznos story that they did.
Oh yeah.
Yeah. Denny used to pay these people like $10 a week for floor mats. Smart company.
Okay.
That's how I realized I could just go buy a floor mat at like Walmart for $10 and then just vacuum it.
There is a big red candle yesterday, folks, that you're going to have to contend with in this issue. Let's see how it's trading. And if you got much action, this is a higher price stock. I don't know if people are making markets in it yet, but better hold that close. I mean, I don't know how good the report was, but it's trading up $1.63 at 164.74. Just keep it above red here. 163.11 close. 162.11. That was the low of the day. So if you start to fall, keep an eye on those levels. If it takes out 162.11, folks, look out because you had a big old green bar on Feb 14. So 154.56. I think on a rally here, I think you're going to find people trying to get out of this issue. Not the great. It's a good report, not a great report. 172.06. I mean, that's still $5-6 away. Don't know if it has a gas to get there. Maybe 170 will be a relevant number now that it's fallen away so far away from the 172.06. And if you're looking for a new all-time high in this issue, that's 178.34. That was on March 9th, and it made the all-time closing high that day at 178.30.
It's a lot of numbers. A lot of numbers.
Too many numbers. I'm sorry.
Too many numbers. We're buzzing you for too many numbers. Buzz.
All right. KB Homes, KBH, Q1 adjusted EPS 40 cents. That beat by 12 cents. Sales 871 versus $873 million. So a slight miss on that. On the sales, and they beat on the EPS. They're getting an upgrade this morning to outperform from Wells Fargo, so they liked it.
Yeah, and it was just hanging out there last night ahead of, like after the report, and then the upgrade I think is helping it. But this is one's been really beat up. I mean, started the year in January, had the nice pop there. I don't remember what the pop was there for, if that was earnings too. But anyways, got up to over $38, gave it all back. We're talking about $28 stock now. I mean, all these home builders have been in the dumps. So not surprising if you get an okay report that the stock's going to get a little relief rally here, and that's what we're seeing this morning.
And trading up over $30, trading at 30 and a quarter, got all the way to 30.97. That was on some very, very light volume, less than 5,000 shares. Like to take a look at the dailies. That's where your key is going to be. And holding $30 is really important for this thing. Couple highs at right under 30. Couple highs just over 30. So that's my line in the sand. You hold $30, you got a chance to do some work up to that pre-market high. If it really gets out of control, got a triple top at the 31.75 area.
Let's jump over, move away from earnings for a second. I just want to go to one ratings, and you can give some other weight ratings if you want as well. But let's talk Square here this morning. SQ, they are getting a downgrade here this morning, and this is helping your bet, Joel. I didn't quite get there. I had the 59.5. You have the 49.5. Got up to 58.46. I missed by a buck, but now you are back. You're actually winning this bet here now because we were trading at 53.75 this morning. Craig Hallam downgrades it to sell. And that is why Square is taking it on the chin.
And he is one of the better analysts on Wall Street.
The bet. You're back. You're back.
I love it. Can we get him on the show right now?
Back, but it's a comeback.
It's going to be tough for me. I mean, this stock is in favor. A weak market.
Now, what are you talking about? It's going to be tough. You're winning this bet. You're in the money.
52.78. I don't even want to talk about the 2,600 versus 2,800.
I smoked you on that one.
I mean, I got margined out.
You're breakfast on that one.
I 27.99.75. I mean, they pulled my account. They told me I couldn't sell anymore there, and I told them it wasn't going through 28.10. And I don't know. They talked to my bank, and they wouldn't let me have that many contracts on. So you ended up winning. You ended up winning that one by the skin of your teeth. Pre-market low 52.78. That's what we will want to keep an eye on here. Let's look at the daily chart to get a better idea. The stock's had a great run. I don't know. A lot of people, they're short this thing, so they made an opportunity to bring this in. 53.15. We are still trading above that. So I'll say Dennis is still in control here unless we take out that 53.15. We're 70 cents away from that. After that, 50.76. That was your low on March 13th. And once again, if you want to get green or you want to look for a resistance level, closed yesterday, 55.16. I think you'll find some sellers there. And all-time closing high, 57.69.
Can we talk about this Target Kroger thing?
What's going on?
That just broke.
Yeah. What's up?
Yeah, we got Fast Company reporting talks of a merger between Target and Kroger.
When did this break?
Minutes ago. It broke.
Holy cow.
It broke at, I don't have a timestamp on it. Yes, I do. 8 a.m. this morning is when the article went up. So there we go.
Kroger, Target, merger. Potentially a merger. Who broke this rumor?
Fast Company. They're more of like a, they're less of like a Wall Street outlet, more of like a businessy.
You're telling me there may not be that much to this.
No, it's not that's not what I said. That's not what I said. I'm saying they don't generally report on like M&A stuff, but they're more of like a technology leadership.
What's the article say? Did you take a look at it? Read us. Give us the Cole's notes.
Okay, here's the lead. Target and Kroger are discussing a possible merger. Several people with knowledge of the matter tell Fast Company. And then it goes on to kind of break down
Fast Company.
Yes.
Are you thinking a bad company?
Oh my God. No.
Okay, Joel, that was a bad joke. Even though I laughed.
I don't know.
Kroger's spiking on this news. So
this makes no sense to me. But
well, there'd be synergies, I guess. You could close down half those stores, but how's that help revenue?
I don't know. Let's just look at the price action. Kroger got a spike up to $26.50. Now $2 off that. So I think people are kind of feeling the same way. Target, that got a spike off it, made a double top at 71.38. That's backed off only 50 cents there. So keep an eye on your pre-market highs. We'll also just take a look at the dailies on these stocks. And well, Target found support in the same area it did 3 or 4 times. Oh boy, 71, 77, 71 and a half. They're your 2 and 3 day lows. So there's your resistance. And then Kroger, let's see here. That just hung on in there, after the report. High since that on the day of the report was 24.82. We're trading above that here. So careful if you're shorting this thing. Good chance that you can go up here and fill the gap. Oh, no, you got a long ways to go to fit. Nah, not too long. 26.02 fills the gap, but needs to hold these gains.
Article also said the two companies first started conversations last summer about a partnership that could improve Target's grocery business and give Kroger customers more access to merchandise and e-commerce. They spoke again in the fall, and talks are ongoing this year. So take that as you will.
I don't know. That's an interesting one. Anyways, I'm just going to leave that one there because I don't think this is going to happen. You're getting a big pop here in Kroger. It's up 7%. You're getting a good pop in Target too, up 3%. So it looks like the market, would initially applaud something like this, but I can't see it happening. It's just those two. You got 2 huge box stores, groceries and Target groceries / apparel. And now you're going to, be a bigger box store, in a world where we've been saying we need less box stores. You're going to have this company form. And I don't know, unless they think they're going to close some stores and that's going to help them with the synergies. But I don't see how that helps them with the revenue either. So this doesn't make any sense to me. I got to think further on it, I guess.
All right, moving on. Let's go to, I guess you guys want to talk about Wynn. Steve Wynn is
he's out. Is he out? Fully out?
Yes, he sold about 8 million shares at an average price of $175 a pop. And that's about that.
What's that?
He's out.
He's out.
Huh?
Sounds like he's out.
Well, they like that. Trading up 854 at 184 even. What a great couple days it had. Got back almost all of those losses from when it, the initial news broke on that. Let's take a look on the daily chart. Well, you're at 184.04. Where are the highs in this thing? I see a high to contend with at 185.80. And then there's a trio of highs in the 187 handle. So if you're looking for some follow through on this move, keep an eye on that. 175 is not the greatest price, I guess, compared to where it is now. But he's out. That's good for the company. The 15-minute chart looks like you got some more upside in it. Not showing any red candles here. One red candle since the 4 a.m. open.
This is one. The 160 was major support. It breached it that one day. The breakdown became a fake down, and we blasted off into orbit after that. Now you come back up, 183. You get a nice 8-point pop on this. Is it good news that he's out? I guess, if those allegations, if any of them are true, I guess it's good that he's out. So they're giving it the applause for that. Maybe, try to separate him from the name, but his name is still all over these casinos. So I don't know. I'm still not that all excited about the stock at 184.
All right, do you guys want to go like broad market now? You want to talk about like just yesterday as a whole? I don't know if Dennis can even do that, but Joel, do you have thoughts on just like yesterday's action?
We peaked in the pre-market. Had to rally off the open, and I just think there's a lot of headlines and tariffs and trade wars and Trump's lawyer resigning. I mean, there's just a lot of uncertainty in the political situation. And, it just seems, I mean, his legal advisor stepped down because he said, Trump he wasn't listening to him. So, I mean, many feel, or some investors feel, they're just nervous. There's a renegade in the White House, implementing policies maybe that are going against some of his advisors. The advisors leave. I'm not an economics major, so I can't really, go into the whole, tariffs and trade wars and everything. But man, oh man, I mean, there's a lot of uncertainty. And when there's uncertainty, people are nervous. They hit the sell button.
I mean, talk about this, potential trade war it seems like it's on now, because you had the major headline last night breaking that China is going to initiate some tariffs here. What is this headline? Give us the details. Steel, aluminum, what else?
Right. So this is a reaction. Trump had previously announced tariffs on as much as $60 billion in Chinese products. They come back and say, okay, we're going to put tariffs on $3 billion in U.S. goods. Includes fruit, includes pork, recycled aluminum, steel pipes, all subject to higher tariffs. So that's where we're at.
And there was another piece of news that was out, and I'm not sure the exact timing of it and how it contributed to the market, but, $1 billion in arms sales to Saudi Arabia. I mean, that doesn't make me sleep real well at night. So, I mean, trade war / nuclear war and a war. I mean, talk the double war trick here. I think that gets people nervous. How much of the fundamentals changed in the market? How much has this changed from, the prior earnings season? I mean, the fundamentals are still there. Oh, I forgot to mention rising interest rates. That's another thing that's negative on the market. But this market has been resilient and it's bounced back on many different occasions. And this is just another one.
This just seems like, this was totally predictable. I mean, you'd think China wasn't going to retaliate with some of their own tariffs when we're doing this. I mean, this is what every economist was warning Trump about when he, initially, put these tariffs in or proposed these tariffs, and that's why, you have Kudlow in there now. And who is a free trade guy? He's all about the capital markets, and he's all, so he brought him in, and you figure he's going to, bring it down a little bit, bring it down a couple notches. But I mean, they were going to retaliate, and so this is not surprising. And maybe that's why the market is kind of shrugging it off, because everybody knew this was going to happen. I mean, they weren't just going to sit there and allow, tariffs. Well, we're going to get you back. So maybe that's why you're actually seeing, stocks like U.S. Steel rally in the face of this. I mean, U.S. Steel sold off 20% since those tariffs were officially announced. And actually, now you have China coming in with tariffs on steel of their own, and you see U.S. Steel rallying. And people might be scratching their head, but it's kind of the opposite trade. I mean, everybody knew this was coming. So it's like the sell on rumor, buy on news type of deal. And maybe the tariffs weren't as bad as they expected.
Yeah, I mean, just a lot of things going on in the White House, and what that breeds uncertainty. And can the uncertainty, can the fundamentals of the markets, overcome the uncertainty in the White House here? But politics is politics. I mean, if you're trading during the day, a lot of volatility due to the comments. So you just have to keep your eye on the wire and just use stops, be careful. Don't try and, make interpretation out of every headline.
Well, and that's the difficult thing that so many traders do, is they try to interpret the news. I mean, we do this on the show as well. I mean, you can't help but try to interpret the fundamental news, but I'll tell you, it's a difficult gig to sit there and say, hey, this is the fundamentals, this is what makes sense, and this is what the stock's going to do. And then it does the exact opposite. That's why you got to wear more than one hat. I'm wearing my hat right now, but you got to wear more than one hat, because if you're just wearing a fundies hat and you're sitting there trying to analyze from a fundamental basis, making all of your calls just based on purely fundamentals, it's difficult because the market doesn't make sense a lot of times. Sometimes technicals matter more than fundamentals. Sometimes sentiment matters more than fundamentals. You got to wear more than one hat. A purely fundamental analyst is having a really tough time right now, and not just that, a macroeconomist is having a tough time right now too, interpreting why the market would be up here today when China announces tariffs last night.
Yeah, and then, but there's tariffs, but then we're going to exempt Canada and Mexico. I mean, it's each news headline, may contradict the prior one. But coming up 8:30 here, Dennis, some imbalances. There got to be some.
Yeah,
imbalances.
you know what? They're mostly to the sell side, but remember, you had a lot of institutions probably putting these on the books here a while ago, and we've rallied significantly since then. So I would not be surprised if you do see some of these sell imbalances turn into buy imbalances. Notable Alibaba, 87,000 to sell. It's starting to get hit a little bit on this imbalance data there that just came out. It was trading at 86.5, now at 86.20. So they hit it a little bit. It's 87,000 to sell, but it is trading up, $1.50 here in the pre-market. So I'd expect some institutions to probably come in and buy it. All depends. We're chopping around so much on the S&Ps. I mean, it depends on where we're going to open. We still don't know if we're going to open up or down. If we opened right now, we would open up. But I mean, we were down so much last night. We still got a lot of chop here happening. And it's going to be a choppy, wild, volatile day here today. Bank of America, 90,000 to sell, but the banks are strong. Better indicators, the TLT. TLT is getting rocked here today, which means it is good for the banks. So I would be very surprised if most of your banks do not open significantly higher. That's Square, 51,000 to sell. We already talked about the catalyst for that. That is the Craig Hellum downgrade to sell. That's about it. They're small, so you got institutions that are probably going to be coming with buys if we remain as high, up as much as we are right now.
One other thing I wanted to mention, and what was last Friday, Dennis? What took place in the market?
Quad witch.
Yep.
The witch. Yep. The witching hour.
And a lot of times, there's a turn on the quad witch, and it's either a strong continuation of the trend of the market. I guess that would be an uptrend, or there's a reversal. And boy, that reversal started, as you can remember, Sunday night. Right from the get-go, they started selling it, and the SPOOs have lost, over a couple hundred points off this. But we'll see. We'll see what the market can do today. It's a Friday. Keeping an eye on the pre-market high, 20. We're hanging out right near the high. So far things are looking good. We got 3 minutes to our first guest?
Can we talk about Facebook a little bit? And just levels and that, based on, yesterday's trading action. I mean, or the last few days, really, when would be a good time to buy if you're looking to buy? When would be a good time to sell if you're looking to sell?
Well, okay, so this, you've got support here now getting defined here. So if you want to say this is the bottom, I want to be in Facebook and I like it from fundamental basis, you got some levels to lean on here now. You got the double bottom from the last couple of days. I'm going to call it double bottom because the stock has a 7-point range. You get two lows within 40 cents of each other. That's good enough. 163.30, 163.72. That's your day trading, swing trading level. Starts taking that out, then I think it tests the low of 161.95. Takes out the 161.95, then that's your investing out. So if you're coming in here and saying, I'm going to stick this in, I think the low is in, I'd stop out at the 161.95. If you're coming in here as a day trader just from the last couple of days, I'd stop out at 163.30. So that's if you're a buyer. If you're a seller, it's a lot more difficult gig because the highs from the last 3 days are a hell of a lot higher than we're trading right now. You're 166, or you're $4 off the high just from yesterday. So if you're shorting it in here, it's like you almost got to give it to 170. So I can't bring myself to short it here, knowing that I got to give it that much, just to get, until yesterday's high. So, that's why I think I'd be hands off as a short seller here, at least in the short term right now. I might nibble on the long side, if those bottoms can hold, but it's still kind of in the middle of nowhere. That's my technical analysis. What's Joel going to say? I might have took some of your.
No, I agree with you. I mean, that low, that 3-day low is huge. If you're leading on that, 61.56 was your low back in September too. It's kind of strange because you're looking at the daily chart here, and what a small inside range day yesterday, and it was still set. It's a 6-point range, 6.5-point range. Yeah. So the close is important. We're trading up $1.11, and then 170 to 160. So basically, you have an inside day. But if you take out the bottom of the 2-day matching low. Yeah, you might get some downside to 161.95, but you might find some other buyers there. 170.27, that was a high from yesterday, so that could be a target. But it's digesting here. I guess the best thing for bulls would be if it just had a couple days of chop here, holds that low, then people kind of forget about the news, and then you get a breakout over 170. I think that's the best way to play it.
8:35.
Yep, 8:35. We're going to take a quick break and grab our only guest of the day. His name is Greg Firman. He's a new guest. He is speaking to us from Toronto. He is a trader. His firm is E-Trade FX, not affiliated with the brokerage. And we'll be right back in a moment with Greg Firman. Welcome back, everyone, to PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Dick. We are on now with Greg Firman. E-Trade FX is the name of his firm. He's a trader there focused on the Forex and futures markets. Greg, how's it going today?
Very good, Spencer. Thanks for the call this morning.
Joel, we're outnumbered by Canadians. Or no, we're evenly numbered by Canadians now. It's 2-2. It's 2-2.
So. Wow, so we have the we have the edge.
Okay, we have the edge. Well, yeah, you're half, so I'm outnumbered. Okay. Anyway, Greg, thanks for coming on today. Why don't you tell us a little bit about sort of your trading philosophy, what you do first of all on a day-to-day basis, and then your kind of trading philosophy.
Sure. Yeah. No. Again, my company is E-Trade FX. I work out of Canada. I'm licensed as a CTA in the U.S. I predominantly work in foreign exchange and commodity futures, which of course includes the S&P 500 and gold and oil and all those things. But my primary basis of my analysis and what I do is global intermarket correlations using the Vantage Point software. I use that with basic price action. But again, I get most of my cues and my trades from that program, basically looking at how these global intermarkets affect the currency that I'm trading. For example, there's been a lot of back and forth this week with the US dollar. Predominantly, we've been buying the Euro-US pair based on rising gold prices. The fact that gold has remained above its yearly opening price, and the indicators from Vantage Point and the price action tells us that based on a global basis, we should have some exposure to gold in our portfolio, and that's being confirmed, of course, by Vantage Point.
Why do you take aside from the fact that you trade Forex, but what's behind your global thesis, your global perspective on why you look at it that way?
Basically, what I've noticed, Spencer, is that big money is very much like locusts. They move from one field to a next, they ravage the field, and then they move on. Most of your retail traders, they come in at the end of that and get scraps, where I try and get myself and my guys out in front of that. So basically, if big money is moving from one currency to a commodity to stocks, and it's just going around and around. So basically, what I'm trying to do here is follow the money trail. So I know that if money is going into gold, the direct intermarket correlation is that it's probably going into your commodity currencies, and it's more likely than not, if it's not already in the euro, it's going to be going into it. So basically, in the foreign exchange market, we're either buying or selling US dollars to try and keep things as simple as possible. But predominantly, these global intermarket correlations will drive that currency. They're either coming into that currency or they're coming out of it. And usually those intermarkets will give me a leading indicator as to when that's going to happen.
Talk about your morning routine. When you sit down at your trading desk, what do you do to get ready for the day?
Well, basically in the morning, with the way I do things, Spencer, is I get ready the night before. So when I update my programs, particularly the Vantage Point software, it updates at 6 p.m. Eastern Standard Time the night before. I have all of that information out in front of me already. So essentially the way I do things is I have the levels, I have the direction of what I want to trade, and I let the market come to me. Where I see a lot of traders, they're going into 1 minute, 5 minute time frames. And it's disastrous. They're looking for a signal that just quite frankly isn't there. If you're scalping, you can get in there a little bit. But even if I was scalping, I'm still taking the signal off the higher time frames, the primary direction off the higher time frames. I think we can get most of the information we need from the daily, weekly, and monthly time frames, and just try and stay away from the noise in the lower time frames.
So
completely agree with you. I just wanted to, reiterate the point you just made. And if somebody looked, I have 5 screens that I'm looking at right now, and I have one chart up. So it shows you how much, I really rely on technicals. But the one chart that I keep up is a 3-month chart. And so, and I'm a day trader. I'm an overnight trader. People say, you're nuts. Where's all your charting? Where's all your, and it's chart, I do use technicals. I do switch that chart back and forth. I usually go from the 90-day chart, and then I switch it over into a 3-minute chart. And that kind of shows me what it's done today. So, and that's all I want. So I want to know what it's done in the last 3 months, and I want to know what it's done, like basically an intraday chart, what it's done today. These tick charts that people go into, it's all noise, especially in a high frequency trading market where, the short term, microsecond is dominated by high frequency traders. As day traders, we want to stay away from the high frequency traders. I mean, those guys have, dominated the market making structure of it. And if you're sitting there trying to grab a penny here and a penny there, you're competing against the best players in the world and you're playing the wrong game. So I completely agree with you, taking the longer term time picture, even for day traders, is the better way to go. It's a better approach. So it's a great point you're making.
No, thank you. Thanks very much. No, and that's what I've noticed. I think we all learn things the hard way. We all start off by thinking that, we're not getting as good of an entry point when we go to the higher time frames. When actually it's the exact opposite. Even if you look at Euro US right now, there's a massive support level, obviously down at 121.50, but there's an even bigger one at 122.50. And the second gold started to rise, I could care less about the entry point. I just hit the buy button because I know that if gold is moving, now Trump's helped me with that a little bit, of course, with with some of the comments with his tariffs against China, but that'll cool off like anything else. But the key thing is that the second basically that level held and gold started rising, can't get below 1302, then basically that tells me that the euro is not really getting much below 122.50. It went down around 122.40, I think, this week. And the buyers were just sitting there waiting. And, we could probably do a whole show just on the Fed, what the Fed had to say. But what I did find interesting about that Fed, when I was looking at the projections, which was very unusual, that they talked about hiking 3 times this year, 3 times next year. But then I noticed in their projections that they intend to cap around 3.8, and then they actually they're advising us now they intend to cut. So that tells me that we're not ever going back to 5% interest rates anytime soon, right? So when I look at that, I'm saying basically there's not much there that's helping the US dollar, is there? It's even with all these hikes, it's not really going anywhere fast. So basically, the dollar has been very negative this year. So whenever I'm essentially hitting the button, regardless of what currency pair it is, do I want to be buying or selling US dollars? And currently, every time I have to buy US dollars, I tend to cringe a little bit. Nothing against the country or anything like that. It's just the currency is struggling. I've never seen it struggle this bad. And, with the equity markets, one of the major global intermarket correlations is, of course, the equity markets and the dollar yen. So, if you're 2,800 on the S&P 500 in the 15, 20 years that I've been doing this, that should put dollar yen at about $1.30. And we can't even get over $1.13, $1.15. So that's telling me the longer term depreciation is starting to really catch up to the dollar here.
Boy, several things here. We're on the line with Greg Firman. He's a trader at E-Trade FX. First of all, I just wanted to make comment on the time frames. I try not to go any shorter than a 15-minute time frame. I will look at a 1 minute off the open. And I just wanted to make a comment before I get to the comment about the open. What your style of trading, you entered that gold trade, you hit the button because you knew you're out. You knew, okay, I'm buying it here. The reason I'm buying it here is because I know that I'm wrong here. And I think that that's what people, trying to get their confidence and doing and pulling triggers. If you know you're out before you even get into the trade, then go up. You got to go ahead and make the trade. Because it's being based on something. If you're wrong, you're wrong. If you need to re-enter, you can re-enter. The other thing, a really interesting comment that you made just at the top of the broadcast, you said you like gold because it's above its opening print for the year. Now, I focus a lot on opens, daily opens in both stocks and the futures. I've never heard anyone, make a call or a determination based on the opening print for the year. Could you explain that in a little bit more detail?
If you pull up your daily, absolutely. If you pull up your daily chart of gold, you look around the level around 1302. Let me just double check. I'll give you that exact level. But what I've been doing is watching that, and I do this every single year. 1302.39 approximately is the opening price for gold. We can see that in 2018, we've come down to that level multiple times, and it's aggressively moved out of there, including just a few weeks ago. So when it does that, when I hear a lot of banter back and forth, because obviously the Euro US is the number one traded currency pair in the Forex market, when I'm looking at this, I'm saying, a lot of the traders are missing one key component here, that if gold is, and a lot of people will say gold's bearish, blah, blah, blah. I don't need to debate that. I'm simply saying for this calendar year and last calendar year, gold has remained above its yearly opening price. And the fact that we're coming down here and retracing repeatedly to this level that has absolutely nothing to do with Fibonacci or Elliott wave or some of these things. It's just a yearly opening price. So in my theory is when I look at these currencies, when I look at these commodities, including the S&P 500, I'm watching 2667 like a hawk this morning because this is the second time this year we broke through this level, which is the yearly opening price. So if the S&P is really in a corrective move, then we wouldn't be getting below this. They keep saying, oh, no, keep buying the equity markets, keep buying the equity markets. And I'm saying, well, I'm not sure this is just a corrective. This could be the start of a bear trend. But if that is, that's one more, bullet in the gun for for gold here. So when I'm looking at that yearly opening price right now, as long as I'm holding above that level, there's a clear bias for the Euro US currency pair to go higher. And there's a clear bias for the equity markets to go lower. That's the global intermarket connection that I'll make. And, a lot of people, they're looking for the perfect entry point and, all the time. Yes, there's some very good entry points, but at the same time, we don't need to be that we don't need to be that anal about it. We just need to know the direction in which we're kind of going in here. So if gold is going up like that, then I am definitely a buyer of Euro US, a buyer of pound dollar. Aussie US and New Zealand US, some fantastic value there. US CAD, another example of that. Looking at the US Canadian pair this past week in the live training room that I run through Vantage Point, we were talking about shorting US Canada 130.50, 131 this week, and it was based around the fact that oil prices were rising. So if you guys here, you've got some Canadians and some Americans on here, which is awesome. You guys, you want to trade the US Canadian pair, it's a great pair to trade. Just watch oil. I can trade the US Canadian pair without even looking at the chart. All I'm doing is watching oil and watching gold. And both of these two are quite bullish, right? So as soon as oil made that spike above $62 a barrel, I glanced at the U.S. Canadian chart, but I really could care less. I just hit the sell button, and a few days later, that thing's up 200 pips in a matter of days. And there was very little effort on my part to get that trade, and it's just a matter of patience, right? And I think it shot a little higher too because of Trump talking about the tariffs on steel and aluminum and then backing away from those. And I think he'll back away from these China tariffs too. So I think, things will calm down here a bit, but more and more money this year is going into gold. And as long as that 1302 level holds on gold, the chances are the US dollar is going to be pretty weak right across the board.
All right. We've talked a lot about your entries. Talk about your exits. What do you determine? Do you take hard targets? Do you have trailing stops? I mean, getting into the trade is hard. Sometimes getting out of the trade is even harder. Give us your thoughts.
You're right. You couldn't be more right about that. And most traders, they really struggle with that. Now, what I do like to use is I like to use swing highs and swing lows. I'm a big proponent of price action, absolutely, because again, if you look at a chart where you've got a swing high, for example, and you've got 2 bars to the left, 2 bars to the right that are lower than that highest point, it's a fractal, whatever you want to call it. The fact of the matter is, for whatever happened at that time, essentially the market failed at that price. So we could debate for hours as to why the market failed at a certain level. I just don't care. It's irrelevant. It failed. So, when the market is so repetitive, guys, ever from a month over month basis, usually around the middle of the month, the beginning of the month, the same thing happens over and over and over again. So if I see a swing high there, but predominantly when I'm using a product, for example, like Vantage Point, which takes the correlation of 31 other markets when it forecasts that target market that I'm trading, I'll look at this and say, okay, if the same signal that I got from them based around those 31 other markets that got me into this trade, the same thing will tell me that, look, there's a crack in the dam here. I should be looking at moving away from this particular trade. At that time, I'll either trail my stop up or I'll manually input my stop just to kind of stay back behind the broker radar, because we know it's going to retrace. These currencies move within a range of 1% of their daily value pretty much every day. So I know that whenever it takes a big move up, like in the European session, it's going to pull back prior to the North American session. Then it's going to go back up again. Just going to keep repeating that. But on the bigger scale of things, what I've been seeing as of late is the dollar tends to weaken around the 15th of the month, and it tends to strengthen around the beginning of the month, regardless how bad the dollar is doing, regardless what Trump does or Trump says, not even relevant. There's people, the one thing that I like, guys, about currencies versus stocks, nobody has to buy a stock, right? But these governments have to buy currencies. They have to settle their trade balances. They have to convert the currencies, whether they want to or not. So they appear to be, what I see, they appear to be doing it every time around the same time of the month.
All right, we've been on the line with Greg Firman. E-Trade FX is his firm. He also mentioned he runs a trading room at Vantage Point Software. VantagePointSoftware.com is where that can be found out. Greg, thanks so much for the time today. Really appreciate it. Have a good weekend.
Thank you very much. I appreciate it, guys. Have a great weekend.
All right, 8:30. So 8:52 is the time. Joel, where are we at on the markets? Anything interesting happening?
I just have to agree with TT Mac and Angie, baby. What a great interview there. Talking about, go ahead, Dennis. What were you going to say?
No, I was going to say one thing again, with that interview massive respect for somebody that's using so many different tools in their toolbox. And this is what I try to teach on the show as much as I can. You could be the best technical analyst in the world, but really, yes, there's some people that make their living doing that, but there's a lot more traders that make their living when they, look at other things. And he talks about, he said one thing, he says, I don't even have to look at a chart of that Canadian, US pair when, I'm watching oil. And so he's using relationships to, make his money. And he's valuing the different relationships that are out there, maybe a little bit different time frame than that I have, but it's relationship-based trading. And this is something that they don't teach enough. And this is something that I live by. I've made my living for 18 years trading relationships. People would say, what do you mean you don't look at a chart and you hit the bid, on the Canadian dollar? If I told you that, and I'll tell you right now, I would gather 2 out of 3 of my day trades, 2 out of 3. I don't look at a chart on when I'm hitting it. I'm looking at the order flow. I didn't even look at a chart for 2 out of 3 of my trades. And it might even be higher than that, the percentage. So yes, the technicals are a factor, but it's not a major factor for me. It's more the relationships. It's more the order flow. It's more understanding. Like when all of a sudden you have, some news hitting a sector, I don't care what the hell the chart looks like. I care, what that news is impacting it. And, people say, well, you can't make money if you don't look at a chart. I know a lot of traders that don't use any charts at all. There was, who was it? Remember Eddie Franco? Eddie used to trade with Bright, and he never even had a chart up at all. Never looked at a chart, and he made money. He was the one that made money consistently too. So yes, you can be a good technical trader, but there's a lot of ways to make money without technicals as well. So all I'm saying is don't put so much weight that that's all you're looking at. look at some other things.
Let's cover a couple things here, and then we'll talk about the Dropbox IPO. A lot of speculation. GSVC, Dennis, have you been playing this at all? They have a large stake in Dropbox. This is a holding company, I believe, a local company, and big run here from 6.5 up over $9. Put a double top in, and this is based on them, having a stake in a large stake in Dropbox and whatever the value.
What's the symbol?
GSVC, Cap Corp.
I've seen it before. This is not one I'm familiar with at all, though. So I do not follow this company closely. So I can't tell you much, from
it's
that.
A holding company.
But Dropbox is coming. It's coming here. Is it today?
Yeah.
DBX coming today?
Yep.
What they say? $21? Where are they priced?
Is that the pricing in it, Brent? 21.
It's 21 as of this morning. They keep increasing it. I feel like it was.
Well, the actual pricing of the IPO is 21 though. They already have the pricing up there, right?
Yes. IPO is priced at 21.
Okay, so we're $21. So that's your pricing. The one consideration is it's not the best environment in the whole world here to obviously. I'm getting
IPO.
billion trades come as we go red here. I'm starting to get hit on stocks again, so cancel orders.
Okay.
I'm getting picked off because I'm doing a radio show. Anyways, lost my train of thought because I just got let off.
Not the best day to IPO.
Okay.
Not the best day to IPO. That's where you're going with it.
That's what I'm trying to say. Is it's not the best day to do an IPO when you got this much drop and stuff. So I don't know if this can be one that, comes out 21, opens at, 30. I don't know if I see that happening here. Maybe it does, but I think I'd lean more to, that this, could be more of a whimper than a wow.
Exactly.
For at least the people who got, a piece, in the underwriting.
Yeah, I don't generally trade IPOs. So, but
I don't either. I don't trade them at all.
The nice thing about it is that, you're going to get some technical information, and you can remember Twitter, off its IPO. So, take a look at that. That at opening price is important. The opening day of price action is important. I really don't know the product or use the product. It's for sharing files, right?
It's a cloud storage.
It's a cloud storage.
Yeah.
So I don't know who they're competing with, how their product is.
They're competing against Google and
Amazon.
And Amazon
and Microsoft.
And they said they're more similar to Atlassian, ticker Team, TEAM. That's who they compare themselves to. But those three are kind of their biggest peer plays.
Well, I mean, Team Chart looks good. I don't know what kind of competition it'll be, but yeah, definitely, stay away from it the first day. And then, it's nice to get the technicals from it. And then you have the period where just it trades, and then you have the quiet period for analysts. But yeah, you'll get some technical reaction really right off the hop. So, hands off for me on not only on this IPO, but all IPOs. All right, Dennis, we're going to let you go in a minute or so here. We came off hard there. I don't know if we had any economic data or changes in the imbalances.
You know what? Yeah, we did come off hard. One thing I'm going to say is financials are interesting here today with the TLT getting rocked as hard as it is. So if I'm looking for a sector that could show some relative strength, and I'm kind of seeing it a little bit here this morning, it is one, oil. Oil looks strong. USO is trading up here again, so keep an eye on the oil stocks here. And the second sector I'm looking at is the financials. So those are the two sectors on my radar for the buy side. Sell side, it's going to be completely different. I mean, there's going to be still a little bit of a tech wreck going on here. The Qs are down significantly more than the overall market. So you've still got techs that are somewhat out of favor. But if you're just looking here, just at the technicals here, at least, or at the order flow this morning, I'm seeing a little bit of buyers here in the financials and the oil stocks.
All right, S&P futures have gone red on the session. Now we are now 9 points off the high. Level of control will be the closing price at 42.75. I may have to get down and dirty here. If we get down, what's mid range on the session? Mid-range on the session comes in at 37 even. So that's your area of minor support. That'll be the swing area early in the session. I'm sure we'll be all over the place. All right, Dennis, we're going to let you go. Hope you didn't get hit on too many bids there.
I did.
We didn't talk any Michigan basketball, but that's okay. Hopefully we'll still be talking about it on Monday. And
I'll run through some ratings real fast, and Joel, you can grab the screen, and we can do some ticker time after that. But ratings, we have Unilever catching an upgrade this morning. UN from Argus to buy. We had a rating on an upgrade on Win, an upgrade to buy there. I don't know who that firm was. Let me look. Let me get that real fast. The firm on Win was Union. It was Union Gaming upgrading Win there to a buy. We had Bank of Santander upgraded at Keefe to outperform. Dish upgraded Moffett Nathanson to neutral from sell. What else do we have? Everything else is kind of earnings related. I didn't see anything huge as far as upgrades go. Further down the list, Carnival upgraded at Barclays to overweight. As far as downgrades are concerned, we mentioned Square. Children's Place just had earnings, so they're catching a downgrade to underperform from Bank of America. That's pretty much it. So let's go into some ticker time. It's 9:01 now. Joel, what's on your radar?
Well, the Google chat here is pretty active, and active this week has been Stargazer. So we're going to go to Stargazer's first request here, CRM. Salesforce.com. And boy, this one, I think we talked about this a couple days ago. They did an acquisition, right? Who did they buy?
Salesforce let me get the exact firm. They just bought MuleSoft for $36 a share.
Okay. And the only thing I was just a little hesitant about this one, besides a extremely weak market, is, I didn't want to get Cigna. And look at, they hated Cigna's acquisition there. They gapped it down and they just pounded it hard. From starting to look interesting here from the buy side. At least you got it, you know where you're out. But it doesn't look like the sell is done here yet in CRM. You did find we are trading down again at 84 cents. You do have just keep an eye on some daily lows. I see a daily low at 116.22, 115.37. And then a double bottom 112, 113 area. So it's orderly sell off here in it. Street is not in love with the deal. So trading red in the pre-market. That's kind of my sentiments here on CRM. Also, Stargazer asking about Adobe, ADBE. I believe they had some great earnings, right? Made a new all-time high. This was a few days ago at 231.34. All-time closing high, 229.75. We're quite a ways away from that, though, folks. I guess your first target on the upside, yesterday's high, 25.87. And if somehow we pierce yesterday's low at 2026, I see pretty good support. 3 lows right around 218. So kind of falling off here. If it can hang in here for like another day or two, maybe make a little flag, maybe make a challenge at the all-time high. Also, let's see what else here. We don't have the time of the opening. Brent, we do.
Yes, we do. The Dropbox IPO is coming at 10:45. All right.
Well, 10:45 or later.
11:15 maybe is more realistic.
That's the only time you see a good crowd on the floor is when they're doing those IPOs here. So if we got any other symbols here in the chat that you want me to take a look at?
Yeah, I see good from Angie Baby.
Is that a symbol or is she just saying good? I think she's saying good to the comment. Gladstone commercial? I don't think. Angie Baby, are you trading Gladstone commercial? If you are here, chart's not looking real good. I think there's a lot of support under $17 at the $17 area. I see 3-4 lows between 16.78 and 17.18. Billy H, how you doing, Billy H? Joined us this week. I like when these symbols come that I've never even heard of. NEWM, New Media Investment Group, traded down $1.77. News me, Spencer.
New Media is the company that owns or bought. Oh man, I'm blanking on it now. They had previously bought like a ton of newspapers in like 10 years ago, and with the sale of Trunk and the LA Times and the shakeup they're sort of in those wins right now.
All right, what's the news on it today?
I don't know. Do we have news on it today specifically?
It's traded down on pretty good volume here.
Let me check some other places and get back to you on that. I have not seen.
Or is that the price action from? Yeah, that's the price action from yesterday. So let's analyze it from the daily chart and close. I mean, it got up to 18 and then closed the week. Now it's traded down $1.77. Is there an odd lot or something here that traded? Let me see if our off exchange trade. Let me see if I can find this one. Yeah. Oh, yeah. That's nothing. 5. Yeah, there's nothing. 6 shares traded at 1570, folks. So someone just painted the tape there. No big news. So I don't really think you have anything to worry about it. Looking at the daily, I mean, great support at 17. I don't know if someone made a little offer there. They had some good news, but all year support at 17 and important to clear yesterday's high at 17.95. One other pesky high at 18.16. So I guess above $18 here would signify another breakout at this. 17 to 18 is the range here in NEW.
They own like 480 newspapers.
Okay.
Just there you go.
All right. Big T is talking about Consley's purchase of, I believe, a marijuana stock. T, is that the symbol for here? TWMJF?
Yep, that was that marijuana ETF that opened up back in December or January.
Canopy Growth Corporation? Yep. That's what
that stock, right?
Yep, that's what I'm looking at. And guys, April 20th, guess who we're going to have on the show? One guess, chat. Who are we going to have on the show on April 20th?
We're going to have more than one guest on April 20th.
Oh, that's okay.
But I can't answer. Okay, I'm not allowed to answer. But April 20th will be a special themed show, probably all about cannabis investing. Just a heads up.
Angie Baby's got it. Alan Brockstein is going to be joining us. Let's see here. What else have we got? Did you
look at the levels on that?
I've got away from that. We are trading flat here. OTC stock. Big seller here, right around the $26 area. There's your last 3 or 4 highs. So you need to bust above 26 here. You also can figure a 50% retracement, see where that comes in. I would say it would come in just above there. So that's what you want to clear. Recent high of the move was at, let's just call it 36. You had a low at 18, 19, 17, 8.5. And that takes it right back to this area. So clearing 26, that is a good area. What else did we see here? NTRI, is that Nutrisystems? No. Yes, it is.
NTRI, yes, it is.
Yeah. I don't know about this one here. I don't know if there's a whole lot to get excited about on the downside or on the upside. Boy, how many days of this losing streak here? I see 1, 2, 3, 4, 4 to 5, 5 out of 6, 6 out of 7, 7 out of 8, 8 out of 9 losing days. And the only gain was a small uptick of 0.25 on, this is going a little bit longer term. This thing is just not looking good. If you're trying to buy this as a swing low, you got to stop yourself out real quickly at 20. Well, we're already trading down in the pre-market. Is there more bad news on this one, Spencer?
I was too busy looking at Trump tweeting about vetoing the spending bill. I'm sorry. You're looking at NTRI still?
Yeah. Is there more negative news on this?
Not that I saw today.
Okay, let's take a look at the 15-minute chart, and let's look at 24-hour. Boy, I don't know. I don't know what the news is. It trading lower. If anything, you just want to see if it could get back over that closing price at 28 even. Close right near the low as well. S&Ps are just hanging around unchanged here, so that's going to be a good level going through the session. I did not know when Dennis made a call on NTRI, but man, everyone's afraid of Amazon on that. So we'll go back to Stargazer here, and he wants to know about Boeing, BA. And boy, this stock is finally giving back some of this gains. And there's a very important support level to keep an eye on today. You've had several lows here at the 318 area, closed at 319.61, trading down in the pre-market. Double bottom at 1739 and 1765, traded above it and below it a few times here. So really needs to hold some major support. This thing is looking kind of heavy, especially when you close down in that quadrant. So Boeing chart not looking great. Alcoa, haven't taken a look at that one. That one is kind of bearing down on support as well. Bad day yesterday, closed near the low. You can see these two other lows, 44.16 and 44.14. Buck away from there now, but you can see underneath, if we take out that 44.14, you have a big green bar. You got some work to do in that one. And that low after that, boy, 42.28, 42.76, folks. So keep an eye on these two lows. Could have some trouble here in Alcoa. Billy H is commenting on CVA holding up well yesterday, and that's Covanta Holding Corporation. Tight range yesterday. Almost. What did you have? Nah, you didn't have an inside day. You had a lower low by a nickel. So a lot of support. It seems to be kind of the same story as yesterday in the higher 14 handle, and this been in a tight trading range here. So really no big call here on CVA. All right, are we done with all our tickers here, Spencer?
I think we got them all.
Wrap it up. I think we got them all early.
Yeah, that's going to be it for us this week, folks. Hope you guys enjoyed the shows. If you missed any part of any show, you can catch the podcast on iTunes, SoundCloud, and Stitcher, or youtube.com/BenzingaTV to just rewatch the show as it aired with the charts and all that good stuff. But thank you to our guest today, Greg Firman. Thanks to all you who stopped by in the PreMarket.benzinga.com chat and our YouTube chat. Hope everyone has a good rest of the day and a good weekend. And if your basketball team is still in the tournament, good luck. We will see you folks on Monday. Until then, have a good one.